Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Greffner with this, as always, to talk all things markets. University of Missouri's Scott Brown. Good afternoon, Scott.
Happy Friday, Megan.
Happy Friday. It is a very rain-filled Friday here in central Kentucky. Not exactly the type of weather we need right now. I think we should want to shift some of this precipitation to the western part of the country. As I know, there's still a lot of conversations about drought and dryness in your area and further west, some parts of your area.
That's right, boy. Southwest Missouri continues to be dry. Maybe received a little bit of precipitation in the last few days, but pretty dry right now, Megan, that's for sure.
Well, we'll talk a little bit more about some of those conditions coming up in a little bit as we talk about farmer sentiment and get into that conversation. But let's kick things off and recap what happened this week in the markets.
Yeah, so this week on the cattle side of the equation, fed cattle were up $1.45 this week. Those feeder cattle markets were steady for the most part this week, not a lot of change. The October lean cattle futures contract was up nearly $2, and the September feeder contract was up $2.10. We did see September corn futures down again this week, down 7.5 cents on the week. On the beef side, the choice box beef price down 75 cents. On the hog side, cash barrels and gilts this week were down $1.30. The October lean hog futures contract was up $1.10. We did lose on the pork cutout value. It was down about 80 cents. And that was really on what was weakness in ribs and butts this week.
Let's take a look at slaughter numbers. A big week, at least, especially on the hog side of things.
Yeah, it's interesting. We say a big week, and it pales in comparison to some of the big weeks we would have had back in 2020 and 2021. But a run of 651,000 head of cattle for the week ending August 6, according to USDA. That's 18,000 head below a week ago, but 7,000 head above where we were a year ago. And on the hog side, USDA is estimating a run of 2.34 million head of hogs this week. That's 49,000 head above a week ago and 13,000 head above where we were a year ago at this time.
When we're looking year over year on the cattle and the hog side of things, how are we running in comparison?
Yeah, if we look at the cattle side first, up 1.2% year to date. I keep reminding folks the second half year of 2022 might look a little different in terms of where we end up. But on the hog side, we've been down 3.6% year to date on hog slaughter.
All right. The big report this week, monthly trade data, as we take a look at those numbers, interesting, especially as you dig deeper and you look year over year on the beef side of things.
Yeah, for sure. So although both beef and pork exports for June were down slightly from May, when you start digging a little deeper, so June beef exports totaled 131,000 metric tons, essentially. That's up 16% relative to a year ago, Megan. And I think we hit another $1 billion of value in terms of those June beef export numbers. So although down slightly relative to May, the value side continues to be quite strong. China, of course, important to what we've been seeing on the beef side of the equation. On the pork side, pork exports in June were 219,000 metric tons. That was actually down 8% from a year ago as well. Value terms also down about 7% relative to a year ago. China's the story there. I guess maybe some of the good news when we look at the pork side of the equation, we're seeing China hog prices that have been stronger the last few weeks. So maybe we'll start to get some additional trade going to China as we look ahead.
Are we still, is African swine fever still, obviously it's still a risk, it's still an issue in certain parts of the world, but is it still impacting or having as much of an impact on the global markets and the global marketplace per se, or is that kind of pulled back a little bit?
So I won't say there is no impact, but it doesn't seem like it's as strong as it once was. I think some of the strength we're now seeing in China prices in particular have as much to do with an economy that's come out of kind of that COVID lockdown period where we're starting to see some demand strength beginning to happen. Just to make sure we put in perspective here the difference between beef and pork. So year to date monthly pork trade, we're down 676 million pounds. On the beef side, we're up 123 million pounds cumulative for the first 6 months of this year relative to a year ago. So it just shows you the difference China's had in terms of beef versus pork.
It's just a great opportunity, and I think it's incredible too to think about it, because we don't want to put all of our eggs in one basket, right? We saw what happened with China and some other commodities as well, but the opportunity for U.S. beef in other countries, and then just the continued growth perspective for U.S. beef in China, has to really be a bright spot for the beef industry and the cattle industry in general, but also coming at a time when we're seeing numbers shrink.
Yeah, for sure. We have a lot of issues coming on the supply side, yet demand and export demand remains strong. I think it's important to remind ourselves every now and again of how long did it take to get U.S. beef into China markets. We were trying, and it's amazing how strong that's been once the spigot has gotten turned on. I just will keep saying market development is going to be really important for countries beyond China, as we want to have some risk management strategy against being too dependent upon one country for trade.
And it's just so dang good. U.S. beef is just so good.
And a point that should never be lost, right? So I think it's something that the industry has done well, putting in front of consumers a product that they want. That's always going to be a win at the end of the day.
Scott, let's talk jobs report. Really kind of some impressive numbers in this report.
Yeah, so 528,000 jobs added in July. That far exceeded the 258,000 pre-report estimate. They just switched the 5 and the 2, by the way, if you look carefully at those numbers. It is surprising how strong a jobs report. It has to be a positive, I think, to markets. Perhaps gives us some indication that maybe the economy in this country is not quite as in bad shape as some have feared it might be. I'm not suggesting that we still can't have a recession, but that's some good news out of the jobs report. I'll keep saying, give consumers more jobs, put more money in their pockets, because, by the way, wages up 5.2% relative to a year ago. We want to spend a portion of that on some good food products, good beef and pork products.
And at the same time, we've seen a pretty significant decline in gas prices from their peak, their height, just a few short months ago.
Yes. So all in all, we probably have consumers who are breathing a little sigh of relief right now, just given the hit on the pocketbook and how it's changed. I always say it's amazing how these fuel prices look better on the way down, yet they on the way up still looked awful high. But perspective changes after you get north of $5.
I think I saw $3.49 this morning on my way home, or yesterday on my way home, which is a far cry from the $5.09 we said not too long ago. And again, still much higher than where we have been. It's just, it's kind of crazy to think about all of these pieces coming together and putting a lot of strain on the economy or on incomes and disposable income as well.
Yes, for sure. And so that's the one we need to continue to watch. If you ask me, what are the risks out there? I still worry that the economy in this country continues to slow, and that doesn't help meet demand. So it's nice to have some good news that maybe we're in better shape than we thought we were.
Some other quick news. Normally we don't talk about this too much, but I think a week we have a little flex time and something to point out too. Purdue University CME's Ag Economy Barometer was released this week, and while it did show some month-to-month improvement, it's still well below if you look comparison year over year. When you take a look at where farmers are in general, how does that direct, maybe as we start to make decisions, start looking ahead to 2023, we're thinking about, planting, we're thinking about inputs, all of these things that come into play. But at the same time, we're consumers, and I feel like farmers are getting hit twice, like coming and going when it comes in terms of the economy and the ag economy.
Yeah. So I often say to me, as you think about producers' attitudes and expectations, right now it all depends on where they're located in the country. We have areas of the country that I think are going to put really good crops in the bin. Crop probably almost already made at this point, if not made. Yeah, you got some parts of the country where it's pretty tough. We talked about weather early on. So to me, I think that's driving things right now. Now, I think we are starting to see producers in particular, looking ahead to 2023 going, do I lock in fertilizer prices now? Do I wait? Do I lock in fuel prices now? Do I wait? If I wait, can I get the supply I need? Chemicals are going to be that way again. I mean, so we're kind of back to this things outside of their control in terms of we don't know where the supply chain may still be problematic. But those are some of the things that I think we'll continue to see producers have to deal with as the coming months go by.
God, I think if either you or I could answer that question, we wouldn't need to purchase a $1.2 billion Powerball ticket.
Exactly.
Scott, as we kind of take that into play and talk about some of those areas, drought concerns still out west, still in the south. How does that kind of shape up as we think about inputs on the livestock side of things as well?
Yeah, so for sure, for a lot of folks, hay is going to be expensive. I just will say, so when you take the top 30 beef cow states and you look at the percentage of hay and the percentage of land in D1 or worse drought designation, it rivals 2012. I think we've kind of lost that here a little bit, and that's been a change. So we kind of late spring had the peak of pretty tough weather and drought conditions, and it was getting better. But about the last 5 or 6 weeks, it's done nothing but get worse again. And I think that's Oklahoma. In particular, I'll point out that it's had a huge change in the wrong direction, I might add, to what's a very tough situation there. I mentioned Southwest Missouri. So you're seeing kind of that expansion in large beef cow states that I think makes it very tough for producers to know what to do. And so even though I might be saying cattle prices are going to get really good in 2023, 2024, how do these folks cope with, I can't keep my current herd because I don't have enough hay and pasture to get through the year.
I spoke with the Oklahoma cattle producer a week ago who had a very similar conversation, and he said, things are going to change and they're going to have to make some pretty tough decisions that nobody was anticipating and nobody ever wants to make on their operations.
Yeah, it's tough. I don't like to see potential of record prices because of producers facing the decision they need to make to reduce their herds because there's just not enough hay and pasture for them to keep herds at current levels.
It'll be something that we'll probably talk about week after week and keep a close eye on as we move forward. Scott, it's always great to see you. As we look ahead to next week, what reports do we have coming out?
Yeah, so next week we'll get retail prices, also USDA will give us their August report, WASDE report. That's going to be interesting to watch, as we'll get some yield information for the first time incorporated into that WASDE report. And we'll finish next week with a consumer sentiment report.
Sounds great. We will talk to you next Friday.
Have a great weekend, Megan.
So our weekly livestock market update delivered your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And if you want to check out what's going on the grain side of things, check out our counterparts, Will Robinson and Ben Brown, with the weekly commodity market updates on Tuesday afternoon. Have a great weekend. I'm Megan Grevner for Brownfield.